The lasting damage of Trump's incoherent trade policy. Is the global economy teetering on the brink due to unpredictable trade policies? We dissect the economic fallout of President Trump's actions, analyzing the long-term consequences for investors, businesses, and the global order. The initial euphoria following the tariff postponement masked a deeper unease. While markets rebounded, the underlying damage to global trade remains significant. Trump's erratic decision-making has replaced decades of stable trade relations with uncertainty, leaving economists and investors struggling to predict the next move. Investors and companies have experienced a rollercoaster ride. The initial tariff announcements triggered market crashes, forcing hedge funds to unwind positions and causing the dollar to weaken. Despite the subsequent rebound, global stocks remain significantly below their previous highs, reflecting a justified lack of confidence in the stability of the global economy. The administration's claim that tariffs are paid by foreign entities is a gross oversimplification. The weakening dollar suggests that American consumers will bear the brunt of these tariffs through rising prices, impacting household incomes and consumer spending. Furthermore, the uncertainty surrounding trade policies will likely deter capital investment, hindering long-term economic growth. Businesses require stable trade rules to make informed investment decisions. Trump's disregard for existing trade agreements and his conflicting goals of extracting concessions and reshoring jobs have eroded confidence in the global trading system. This has created a climate of uncertainty that undermines long-term planning and investment. The escalating trade war between the U.S. and China poses a significant threat to the global economy. With tariffs reaching crippling levels, the flow of goods between the world's two largest economies is at risk. This confrontation could have far-reaching consequences, potentially escalating beyond economic tensions. Instead of engaging in unilateral tariff wars, the U.S. could have fostered a coalition of allies to pressure China to reform its trade practices. The Trans-Pacific Partnership, abandoned by Trump, represented such an opportunity. By alienating allies, the U.S. has weakened its ability to address China's trade practices effectively. The short-sightedness of Trump's trade policies has created unprecedented volatility and confusion in the global economy. While some of the immediate chaos may have subsided, the long-term damage to trust and stability will take years to repair. Economists, investors, and businesses must advocate for a return to predictable, rules-based trade policies to ensure sustainable economic growth. Engage with policymakers, support initiatives promoting international cooperation, and demand transparency in trade negotiations to mitigate the lasting damage of these incoherent policies.